Hi everyone. So today we are going to discuss about the Oracle Fusion Payables, P2p Cycle Process, and accounting entries. Yeah. So this is the high-level diagram, which will be a demonstrate about the P2p Cycle Process and accounting entries also. The first I would like to say this high-level diagram will give a clear picture about the entire process flow of the P2p cycle. So each box will give the clear understanding about how the process will happen in the application. So it will get start from purchase requisition and a request for quotation, quotations, quotation analysis, purchase order. So these first 5 boxes will comes under the SCM modules, supply chain modules, which will be integrated with the payable module. And receiving the goods, invoice, account entries, and payments. So invoice and accounting entries and payments, these are comes under the functional finance models. Example, accounts payable, cash management, and the GL. GL is nothing but as a accounting entries where it will get transferred. So this is high level diagram, and we will demonstrate one by one. Purchase requisition. So requisitions again we can classify into 2 types. One is internal and external. So internal can be used by the organization employees who is going to raise any kind of requisition. So let's say example, if the printing and stationery or marketing department or any other departments, if they want to raise any kind of requisition, that comes under the internal requisition. And external, so any of the other persons can be raised requisition to buy any kind of items. Those things comes under the external requisition. And request for quotation. So ideally, when we receive requisition, first we need to see the quotation point of view. So once we get the quotation request, and then we can do the quotation analysis. So quotation analysis will give a clear picture about which supplier is going to be supplying the items which you are looking for it. Let's say example, analysis will be says that the client will go and look at which supplier in the market will be able to provide the requirement what we are looking for it. Let's say example, ABC vendors. These 3 vendors are supplying the same kind of goods. So here we need to keep in mind, so how you are going to do the benefit towards the client requirements. Let's say example, A vendor will be supplying the same goods with the different rate, the structures, and B will be the same, and C also will be providing the same kind of goods but with a different kind of structure. Let's say example, rate and quantity and discount, etc. So first you need to do the analysis over there and identify which supplier is the good for us to get the items. And then once we identify the supplier, and then move forward to create purchase order. So based on the quotation, I mean it's requisition and quotation, and based on that we can create purchase order. So purchase order always will be represent about your requisition says that what are the items you are going to buy and what is the quantity and what are the rate is applicable at the time of raising the purchase order. There would be possibility the rate will be fluctuated at the time of delivering the material or goods to the client. And receiving the goods, this is most critical part, where after we generate purchase order and send to the supplier to deliver the materials to the client. So once we receive the goods, so here we'll do the inspection or validation. So they will comparing the purchase order details versus your requisition, what we have given. Ideally, we can say as the pro forma invoice. Pro forma invoice always will be represent about your final invoice from the supplier. And invoice. So once we received goods from the supplier, so how many quantity we received, or either supplier has delivered all the quantity and what are the rates and everything we'll see. Apart from that, we'll see is there any kind of damages if you want to return the stock back to your suppliers. And here you can say receiving goods nothing but as a GRN. GRN is stands for goods receipt note. This is the standard terminology where you can use for it to understand it. So once invoice is entered, here we can say PO invoice and non-PO invoice also. Here you can say based on when you raise a invoice against PO, that become as a PO invoice. So the moment when you enter the invoice in the payable model, we can choose PO number so that automatically the business unit, supplier details, and what are the details are items we purchase through the particular PO, those details will be populated automatically on the screen. And accounting entries. So once we enter the invoice, as usually we need to do the validation, and if it is applicable for payments, approvals, then send for the approvals. Once invoice got approved, then we'll run for the create accounting to generate accounting entries. And finally, payments. So now the time is make a payment to the supplier against your invoice. So this is the high level information about the P2p cycle. So there will be possibility in the every interview, the questions will comes like, so what is the, can you explain about the P2p cycle process flow and accounting entries also? Here just we discussed this is the exactly the process flow will happen across the application. So that just keep in mind. And so accounting entries. So at what stage the accounting entries will get generated? So we'll walk through one by one. So ideally, when we create purchase order in the Oracle application, either EBS or cloud application, there won't be any accounting entry will not generate for the purchase order. And on material receipt, when you receive the materials, the accounting entry would be receiving accrual debit and AP accrual credit. On completion of inspection and goods accepted, inventory account debit, receiving accrual account credit. If you notice here, receiving account credit and receiving account debit, so it means that these two entries will get nullified and the final entry comes as inventory account debit and AP accrual account credit. So that is how the accounting entries will be balancing in the application. And when you enter AP invoice in the payable application, the accounting entry will get generated as AP accrual account and accounts payable account is credit. It's nothing but as a your liability account. And when you make a payment, accounts payable debit and cash or bank account is credit. So if you look at here, AP invoice account entry and a payment entry, so accounts payable entry is getting a credit here, and again when you make a payment, it will be getting debited. So it means that these two will get balancing. It means that nullify the balance and make it as a zero amount for that. So next, so if it is inventory item, so here as a standards, we are classified into three: inventory item, expense item, and asset item. So if it is inventory item, inventory valuation debit and inventory receiving account is credit. And expense item, if you are purchasing any expense item, expense account debit, inventory receiving account is credit. If it is asset item, asset clearing account, and inventory receiving account. These, whenever you see clearing accounts coming in the accounting entry, then there would be again a credit entry also will be generated. Otherwise, these accounting entries will not get balancing. So at the time of working, so there is another entry will generate for asset item. When you, example, I would say, when you do the capitalization, so that time this accounting clearing account is getting credit and asset account is debit. And payables, AP invoice, accrual account or item as a debit and a liability account is credit. And while make a payment, liability account is debit and cash clearing account is credit. If the client is using cash management application, then only this cash clearing account will come into the picture. Otherwise, it won't be coming in the entry. Now, assume that the client is using cash management. So cash clearing account is debit and bank account is credit. So here you can see cash clearing account debit and is credit, right? So it will get nullified. So these are the account entries will get created at the time of each stage when we performing the application. Yeah, that's all. Thanks for watching my video. Do subscribe.